Where do you go right now looking for yield, looking for return, Scott?
Well, it's really tough, Matt. I hate these markets. These are the most difficult markets to invest in, just because everything is so richly priced. We've been reducing risk. We're heavily invested into below investment grade bonds and bank loans. We've been paring that risk over the last month or so. When you look at the stock market, the breadth and the divergence that we've seen over the last month or two now is playing out. The sell-off yesterday was a clear crack in the uptrend. A lot of people talking about it's not that big of a deal. It's a buying opportunity. Actually, when you look at the technicals, you look at the charts, you look at the prospects that we're going to disappoint on the earnings front because of the COVID slowdown. We're ripe for a correction. And, I like to remind people September and October are historically the worst months for the stock market. So we're kind of pulling back right now, sitting on the sidelines, waiting for an opportunity to pick up assets at a cheaper price.
Yeah, I was actually sharing with some kids on Twitter today the seasonality function on the Bloomberg, proving that September is the worst month for the S&P 500. A lot of people didn't believe me. And I also saw a great chart of the SPOOs this morning. They've been testing the 50-day moving average all year without really piercing it. And all of a sudden, last night, going down through the 100-day moving average. How low do you think we could go? What kind of correction do you think we could see?
The work I did last night shows that I would expect the S&P, to get to somewhere around 4,050, just above 4,000. Now, then the next question we're going to have to ask ourselves, Matt, is, how much further could it go if we get there? And, we have to assess the information then. But you can't rule out the prospects that, if we get to 4,050, that's about a 10% correction from the top. But, I think that, if the news continues to be uncertain out of China, if the economy and earnings are disappointing, then we could see ourselves down almost 20%.